You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Hello, Jim.
Last Thursday, some interesting action on the markets. How is that going to affect gold and silver?
Well, over the weekend, one of the more astute observers of the House Street team brought to my attention something I had missed. Some days when the market's pretty quiet, I pay more attention to the closing price than anything else. And he said, you ought to go back and look at gold, silver, and the U.S. dollar and see what the market action looked like that day. So we're talking technical analysis here. So I went back, and sure enough, it was really quite interesting, and we'll see if this has any particular significance. We'll probably know perhaps even sometime this week. But here's what happened briefly. All three of these individual entities did what is called an outside day. And what that means is when you have the trading range for a particular day, it could also be a week too, but in this case it was a day, where prices trade higher and lower than the day before and close outside that range. That's called an outside day. And sometimes that can be very significant. So here's what happened. I looked at gold and silver, and both of them had performed an outside day on very good volume, and they closed higher on the day outside of the previous day's range. Now, this was not a real big move day up and down, and I think that's why probably most people, myself included, didn't notice it and wouldn't have unless they had actually looked at the day's action. But what happened, it was very good volume on an up day, and it closed above the previous day's range. Now, looking at the U.S. dollar, which often moves inversely to the metals, and indeed this day did as well too, it had a very large day up and down. It opened high on the day, went much higher, and then closed almost at the bottom of that day's range on very heavy down volume. So to me, this is something that bears watching. It's not that I'm going to go out and buy a bunch of metals right now, but I'm going to pay attention because this could mean something.
Now, when you say it could mean something, is this kind of a hint of what we can expect in the markets this week?
It could be a change in trend. And again, these things can happen, and the nice thing about it is that we'll know within perhaps this week if, for example, in the case of the U.S. dollar, if the price goes up and closes above that intraday range on Thursday, then that means it doesn't have any meaning. The charts may have been painted or new information came in, whatever, because high-frequency trading can really distort the charts. And you and I both know what high-frequency trading can do. There's so much of it where you have these huge orders, buy, sells that come in and really make the charts look certain ways that maybe don't reflect what's really going on. But in this case, because the volume was so high in all three of these entities, and the fact that the metals closed higher on positive volume and the U.S. dollar closed lower on very large volume, it makes me wonder, by looking at these tea leaves, if the market is telling us something. And most people won't catch this because the prices they didn't move out of the congestion range, and if somebody just looking at the close wouldn't even notice it. So I find it something fascinating that I want to pay attention to and see if we learn more about it over the coming days, because it won't take too long to find out if indeed it has meaning.
David, the platinum producers, the biggest ones in the world, have been hit by a strike for the last 20 weeks. Talks have failed. They offered to pay these guys $1,170 a month by 2017. I don't think the workers are going for it.
Well, they may or may not, but the point is it's still a dirty, dangerous business, mining these very narrow, deep veins where rocks can literally explode from the pressure. We can have gas explosions where the heat is just really, really terrible. And the point being, it's still going to be really difficult to get platinum and palladium out of the ground. And they may be quiet right now because of the market's perception that the strike will make a difference if it's settled, and also because of some of the economic weakness coming out of China. But the point is, these two metals are going to be in high demand for a number of years. And so it's good to see, from the standpoint of a person wanting to add to their position, it's good to see quiet in the markets. In fact, gold, silver, platinum, and palladium have been relatively quiet for the last few days. And Jim, when a person wants to go in and buy the metal or buy an ETF, if the price is not moving around too much, you can oftentimes get a better price because the spread will be narrower, and in the case of the metals, you may pay a smaller premium. So let's say, just as an arbitrary number, we had $19 silver. If you bought it on a quiet day, chances are you might pay a substantially less of a premium than if silver had been, down $3 on the day and up $1 and you bought it at 19. So the exact same price would enable you to buy at a different rate based upon the volatility or the demand from the supply-demand aspect of that. The same thing would be true with ETFs. So people that want to add to their positions should always try to do so when the market is quiet, as it is today, everything else being equal with their analysis.
Any sign the new Indian government is going to ease their restrictions on the importation of gold?
There's more and more evidence coming out that they will do that, and even more importantly, I think, is we're seeing a lot of advertising by some of the big jewelry producers in India setting up shop in Dubai and increasing their operations there and advertising directly to the Indian public. And if you look at some of these web pages that they have where they have these beautiful ladies with gold on, they're not just wearing a little thin gold necklace. They've actually got almost a brocade of gold items around their neck and around their wrists. And I'll tell you something, there's a lot of gold there. And it wouldn't take too many customers like that to really ramp up the demand. And I think as India continues its march toward better economic conditions and more disposable income for the average Indian citizen, gold and silver purchases, which are hardwired into their DNA, are going to really continue to flourish. And that's where you're going to see big demand going on. And that's why I've always said that gold and silver are good news metals, as well as metals to have against insurance for economic and social disruption.
Well, isn't it what they call the wedding season in India about to happen?
Right, and so a lot of that, for example, when a lady gets married, her dowry, what goes along, that's a kind of an important thing that be substantive in the process of the marriage ceremony. So this is something that people do for very important reasons, and they're going to be adding to their quantity that they have on hand, almost regardless of the price, but certainly when it's been quiet and relatively low as it is now, they're going to be buying even more of it for future events.
Well, I can imagine the premium on physical gold in India when it's become the most smuggled item. It's surpassed drugs by millions of dollars a day.
Yes, and it appears that the premium has declined, which is exactly what you'd expect, given the expectation that the import duties would be reduced. So that's really a short-term consideration as to where the price might go. Demand is ultimately the biggest function of determining price, and David Morgan has always said this. He said it's even more important than supply at any given point, because if you have strong demand, you can see very, very solid prices, and I think we're in the process of seeing that re-emerge as we work our way through the summer doldrums in the precious metals. Thanks a lot, David, for chatting with us. You bet, Jim. My guest has been David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.